Assalamu alaikum, everybody. So today I'm speaking with Ibrahim Khan, who's the founder of Islamic Finance Guru and partner at the VC Curate Capital. Thank you so much, Ibrahim, for being here today, first of all.
No, it's a pleasure, Jan. Appreciate you inviting me on.
Definitely. My first question maybe would be, why are mortgages haram? Since we're in Europe, I guess you're in the UK, right? So would you say it's still Europe, or is that like separate entity now, or?
It's a good question. I think when we get to customs control in France, they definitely see it as, we're not part of the European Union. But yeah, I mean, I guess we are still part of Europe in the general sense.
Yeah.
To answer your question, Jan, so the reason why mortgages are haram is because it's just an interest-bearing loan, right? It's just a simple interest-bearing loan. And in Islam, there are, riba or interest is forbidden. And there's various different types of riba. But the most prominent type is called riba and nasi'a, which is the interest on a deferred payment basis. So effectively, if you're given £100,000 and you have to pay that back, but you have to pay back more, then that more is coming from no productive activity. It's just coming from the time that's taken. So that is forbidden, and obviously a mortgage is that, so that's also forbidden.
Right. Yeah, I'm asking because a lot of people, especially people I know, they don't have to be converts, but even born Muslims in Europe, they have problem because this is what I've noticed. I've been a Muslim just for 2 years, alhamdulillah, but I'm looking at mortgages and stuff like that, and there are no great solutions on the market. There are like, let's say, the Islamic banks in the UK, but they don't operate here. So like people who are in like Europe, they can't even do nothing about it. And then you have like a lot of them take haram mortgage. Like this is like what I've noticed, majority go for the haram, or they just rent forever. And I
Yeah.
saw one of your lectures, you kind of had like a stage of a Muslim life from birth to death. And it's like, what do you do after college? You save up until you buy a place, so you stop renting, right? And then you go into stocks and other things, and then real estate, and maybe like you have an Islamic will and stuff like that. But most people can get over that first hoop, like how do I even get a deposit if there's not even Islamic bank in my country? Like, what do I, like, and I don't have this problem myself, but I know a lot of people do. So
Yeah.
how do what's your take on this overall, like just specifically mortgages? Now, I'm not looking at investing at all, because I think
Yeah.
most people can't get into investing because they're saving up for the mortgage or for deposit, but there's no like
Yeah.
institutional way to do it correctly. I mean, I don't know. So what's your take on this?
So, in the absence of there being any Islamic options available in a country, then many scholars would allow for Muslims to take out conventional mortgages, and for at least their primary residence, so their first
Mhm.
home. And this is based on the famous fatwa by Sheikh Yusuf al-Qaradawi back in I think the early 2000s, late 90s. In a time when across the West there wasn't really any Islamic options available. Now, having said that, there is today a big rise in shared ownership options. So there are providers. I don't actually know what the European situation is like, but there are providers certainly in the USA and in Europe and in the UK where you can buy a house in partnership with that provider. So it's a genuine kind of partnership arrangement. And so the way it works is very similar to how an Islamic mortgage works, which is that instead of giving you debt and you're then paying back the interest, the financier would take an equity stake in the house. They would buy, let's say, 80% of the house, and then they would sell that back to you, and you would also pay rent on their portion.
Mhm.
Um, so I think that's actually a really viable option these days because interest rates are quite high these days. And normally, shared ownership schemes are more expensive because the interest rates are lower. Let's say interest rates are 2 or 3%, and the shared ownership schemes were like, saying 5, 6%. But today, of course, interest rates are 5, 6% as well or more. And so actually they're kind of, level. And so this becomes quite a viable option for everyone to go for, I think, but particularly Muslims. So option one is if you just don't have absolutely anything, then talk to a scholar, but I think they will allow you to, in your area, they will allow you to get at least one, house. And of course, certain people might be more sensitive around this and they would much prefer to just rent and buy in cash. That's also like, that's probably a better, and more pious opinion, but, there is a leniency there. Second opinion is go for shared ownership schemes. That would be, I think, the other alternative. I think those are the basic two options that people have. And then I guess the third option would be if there is an Islamic bank, then you can explore that option as well. But the challenge that we have, Jan, is that we are living in an economic system that is inherently based on interest. Like even the money creation and the what we use as money is created through the issuance of debt. Now, if that is the basis, then it's very hard to kind of get around that and create something purely Islamic.
Yeah, no, that's a good point. I'll have to look into that shared ownership options. So one other thing is, and this is also a startup idea I'm gonna pitch you, so maybe you can just destroy it. So I was thinking of why isn't there a way or like a middle partner between like an Islamic bank that's maybe in Dubai or some other country and like consumer or Muslims here, because there are like tens of millions of Muslims, and since there's not like the best option, it doesn't exist. It's just these kind of like yeah, you can get the mortgage if you talk to a scholar, maybe they approve it, or you can do this shared ownership, but it's not everywhere. And you have like a limited option on what type of house you can do, because maybe I want to buy a land and build it from my own, and it's like a different way. So is there a way, what do you think, if there would be an Islamic bank that's willing to do like a mortgage in another country outside of its territory, but they don't set up like an HQ there, they just have like some company there that does like a lot of credit checks of the consumers and just sends them like profiles, and they sort of approve the mortgages and stuff like that. I'm just wondering, like, have you ever seen something like this where a bank from another country would, invest in this mortgage from another territory outside of their own? I don't know.
Yeah. It's certainly an idea to explore a little bit further. I think there's legs there. And the reason why I think it's worth exploring a little bit further is because I don't think it's straightforward. Like in a startup, you want to be solving a big problem that isn't straightforward, because then once you've solved it, there's a lot of value there.
Mm-hmm.
So the immediate obstacles that you might face if you go down that path are, firstly, there are specific regulations around where a bank may or may not lend, particularly in the Middle East. So in the Middle East, they want that financing to happen within the Middle East. And so, it's often very difficult for what you're saying to happen. Now there are ways around this, and a number of these, well, all of the Islamic banks pretty much in the UK today are actually offshoots of Middle Eastern banks. And so the way that Middle Eastern banks are able to issue any financing in the UK is because they have a regulated bank entity also in the UK, and they are just sending that money to their own partner entity, and then that partner entity goes ahead and lends out on that end. So that's the solution that currently exists. Now, the challenge with that solution is that you as a startup can't really help necessarily with that, because it's kind of they have to set up a bank over here, which is not easy. But if there was a way for you to kind of get into the regulation and understand if there is like a mechanism where a non-bank entity could somehow, absorb up capital from the Middle East and then, then finance people over here. Could be interesting. Like, so I think it's worth kicking the tires a bit on it further.
Okay, that's good to know because I'm actually going to Dubai in a couple of weeks, and I have a list of banks I'm gonna meet. So I'm just gonna I don't know who to meet, so I'm just going for like relationship managers or people like that, just to see if this is even possible. But if it is, since we have like 30 developers in my agency, we can just quickly develop an MVP or do a lot of things quickly without investing a lot of stuff. So it's just something I was thinking for a long time because it's obviously a huge problem, and the market potential is huge. Like if you just do like, let's say 50,000 mortgages, like that's crazy, that. And how many Muslims are in Europe? That's much more, you know. So I'm just thinking about this. All right. So speaking of startups, you also have Curate Capital. So could you give us an overview of why did you set up the syndicate, or I don't know how I should call it, and why is it important for Muslims maybe to look into angel investing, early stage investing in startups when they are looking at maybe they already have a house, they already have everything, and they're investing in, let's say they bought something for real estate, but why is it also good to have stake in startups and look into that?
Yeah. So if we take a step back, so Islamic Finance Guru, of course, is the educational side of the business, and then we've got our sister company called Curate Capital, as you rightly mentioned, where we do the investment activity, and this is a fully FCA regulated entity. And the origins of this were, as you rightly pointed out, in venture capital, so doing early stage startups, doing it deal by deal as a syndicate. Over the last year or so, that's evolved quite a bit because what we realized was that what people wanted was not just to do it on a deal by deal basis. They wanted to just, put it into a fund that then does it for them. So once we became fund managers, we got those permissions, we actually set up a VC fund, which we now open and close every quarter. And so we've deployed into 75 different companies to date. But Curate Capital now is a little bit even further than that because, and ultimately our mission is how can we level up Muslims financially, get them back to a level playing field. And venture capital is a really important part of that, but it's not the only solution. It's not the solution on its own, because a Muslim's diversified portfolio should have real estate and fixed income. It should have, all sorts of other things in there, private equity, perhaps forestry, stocks and shares. And so Curate Capital now offers all of those or a number of those funds either through us, or we will partner up with someone who's a Sharia compliant, very prominent fund manager. And we actually offer the availability to invest in those things. So to give you an example, there's a real estate fund called Rasmala, which manages over $1 billion worth of UK real estate assets. And historically, to invest in that, you would need $1 million just to get going. But through our feeder vehicle, everyday Muslims can now invest in it from 5,000 or even £400 a month, which is crazy. And so for the first time, you can park your money in venture capital, in real estate, in fixed income, in all sorts of different things. So that's just, I guess, really broad brush background on the entire kind of what's going on. And then venture capital, we obviously handle that completely in-house ourselves. And we like to invest in very small companies, so pre-seed and seed. We really love this area because this is where, if you get this right, then it creates hundreds, if not thousands, of jobs, and it has a magnifier effect. So if I invest in BP and Shell on the stock exchange and I make a profit, nice, great, happy. But if I invest in a startup that's run by a Muslim founder in a Muslim country that makes a profit, that means that he's going to create 20, 30, 50, 100 jobs. And those guys are going to have more money that then, they go on, and it's a massive magnifier effect. So for our mission, the VC stuff is just far more important, I think, because it has that magnifier effect.
At which stage do you get involved? Is it like seed rounds or even Series A?
Normally it's pre-seed, seed, or sometimes Series A. Because we're doing tickets of 100, I don't know, 20 to 250, 300,
Mhm.
it usually makes sense to be in smaller rounds where that money is more meaningful. If you're raising at a Series A, you're raising 10 million, then it's not obviously as meaningful.
So if you have 150, how many people are in that bundle usually? How many investors?
So these days we invest through a fund vehicle, so it's well over 100. That'll be I don't know the exact number, but it'll be
Mhm.
well over 100.
So 100 people. So typically they put in around 1,000 to $5,000 pounds or.
Yeah, think of it that way. I mean, so the people will invest a minimum ticket of 5,000
Mhm.
pounds into the fund itself. And so then that will get chopped up into 20, let's say. And then each of those, like let's say whatever that amount is, would get deployed in per startup. So £250 will be deployed per startup from that person's, allocation. And of course, certain people would invest 100,000, 50,000, and their ticket per company is a bit smaller. And so that's all bundled together as part of this fund, and then we invest through that.
Right. Yeah, because usually when you want to get involved in that early stage, I guess the rounds you should have at least like 50K or something. So that's kind of good that you can like bundle up all these people together in this round. So what are the returns you're looking at in this kind of like investing, and what's the horizon, like are you looking for an exit of the startup? And then are these startups, do they have to be Muslim or can they be like just halal non-Muslim
Yeah.
startup?
So to answer the last one, they don't have to be Muslim. I mean, it's about 60% of our startups are either Muslim or Black, minority ethnic, female founders. So like we care about that stuff, but we don't like force it. So about 40% plus are non-Muslim as well. No problems with that. They obviously have to be halal. The In terms of the returns, when it comes to venture capital, this is an illiquid asset, so it's not very easy to get in and out of. You're looking at a time horizon of 5 to 15 years at least, and the kind of returns though that you can make are really impressive. If you get it right, you're probably looking at an annualized return of somewhere in the region of 20 to 40% annualized return, and you can even get more than that. So a way to think about it is like whatever money you put in, let's say you put in £10, you would want to get back 4 to 6x that. So in 5, 10 years time, you would like to get back something like 50, £60, which kind of, averages out to the kind of numbers I suggested. And then when it comes to other investments that we do, let's say the real estate and the fixed income, of course, the returns are much lower. So with real estate, including the capital appreciation, maybe you're looking at 12, 13%. Fixed income, you're probably looking at about 4.5%. And then we actually have a few other VC funds that we work with. So we've invested in a Pakistani VC fund and a Middle Eastern VC fund. So these are the best, I think, one of the best VC funds in those countries. And so we are ourselves an investor in those funds. And so our investors get the chance to invest in, let's say, Pakistani venture through our feeder vehicle. So that's quite cool as well. And again, those would be aiming for 4 to 6x returns. That's kind of standard in venture.
Right. So maybe going back to personal finance, since I think that's also one of your key kind of areas. Maybe people who are listening to us, they have different like backgrounds. Some of them have like companies, maybe, but some of them are students and broke. So what's the lifetime of like looking at the investing? Like we talked about, there was like an overview of that you had a slide of like the Muslim life. So let's say I'm out of the university and I have some money, like very little. And so what's now? Should I start investing in startups now? Like if I have $5, like could you give us like a breakdown of like what's the best stage of life for each of these choices,
Yeah.
maybe? Because that's like the
Yeah.
problem.
So investment decisions should be driven by a number of factors. One is your time of life and your your time horizon ahead of you. Second is what goal it is that you're at and what you're saving for. And then the third is your risk appetite as well. Different people have different risk appetites. Now, having said all of that, the average person, if they're young, they probably don't have that much money. So that's the other criteria. How much money do you have? If you don't have that much money, there's a number of options that are just not on the table for you, right? So you can just rule those out. And instead, you should focus on what you can do. When you have a smaller amount of money, usually the things that are more available to you include things like stocks and shares and ETFs and things like that. However, once you get past that, initial barrier, and you're now in that 5, 10, you're probably 10,000, 20,000, that kind of range of money, then you can start doing things like what we offer at Curate Capital and, real estate and fixed income and things like that. The key thing I would say is that when you're young, you can afford to be a little bit more aggressive. So you definitely should do that. But at the same time, for many people, the first thing they want to do is buy a house. So, that means saving up for a deposit. Now, if you know that your deposit is going to be 50,000 and you're going to be able to save that up within 10 years, let's say, right? That means that you have a lot of room to play with, because that's not, you're not going to need that money for a while. But if you actually have a quite well-paying job and you think you're going to get there within 3 years, that means that you shouldn't put your money into things that you can't get out of within 3 years, right? Because otherwise it defeats the purpose of the goal. So it's balancing a number of those things together that will then allow you to kind of figure out, all right, what should I actually invest in?
Yeah, that makes sense, especially when you have a short-term like goal, like let's say I need just 1 year to buy a house like in cash. So like I can't do like startup investing or something,
Correct.
So that makes sense. But what about this? I get out of school and hey, I want to get rich. Let's invest in crypto. Like what's this stocks and shares, this old school bull? Let's do crypto and all this stuff. Like because young people, they don't have like experience, like you, or they don't have education usually. So how would you break down like the healthy portfolio setup between crypto? You have stocks and shares, you have maybe some startups, maybe some real estate. Uh, so just like an average, it doesn't have to be the best.
Honestly, Jan, I think it's difficult to give an average. I think it depends on very like specific circumstances. Like with crypto and really aggressive investments like that, it's actually not crazy, right? If you're young, and you think, okay, I want a salary of 30,000, I want to buy a house, I need 50,000 somehow. If I am just going to get there, by saving up, it's going to take me at least 10 years, because I don't have that much savings every year. So either I can just kind of save up for 10 years, or I can take very aggressive bets in crypto effectively for the next 2 years, let's say, right? And I'm going to see if one of those comes off, then I can buy a house in year 3, right? If none of them come off, that's okay, because I've only lost 2 years, and some of these will be fine as well. And I still have 8 years to actually get to my goal. So it's kind of weighing up the risk and the reward. Now, the advice I would give is that most people don't have this disciplined approach to investing. So most people will go into crypto or something that's higher risk because they see the dollar signs, and then they don't manage around the position. Like they don't know, like, what am I actually doing here, right? Now, when I framed it as, look, I'm in here for a very, this is the goal, this is 2 years, this is what it's about. If it doesn't work, I kind of move on and do other things. Most people don't have those safety measures in place to think about. And then in terms of like the average portfolio, let's say you've got I don't know, you're relatively affluent, your portfolio's growing. There are many different ways to do it, but 40-40-20 could be one approach. So 30-40% in stocks, 40% into fixed income and real estate, and then 20% into alternative assets that are, that's the more higher risk, high reward stuff. So that could be, one way of divvying things up.
Mhm. I've noticed on your website you have also a list of different Islamic fintechs or companies who offer halal stocks and shares like Wahid. Would you recommend taking a look at any specific if some people want to, look into some of these apps?
Yeah, I think there's a number of them out there these days, and it really does depend on where you are and what is available in your area, because not all of these apps work everywhere. So in the UK, there are people like Wahid Invest, Simply Ethical, and then there are some mainstream providers that offer Islamic options. In Europe, I'm actually not sure if Wahid is available. I believe it is. So I think you can check that out. I think there's also a French provider that offers certain options. But then more broadly than that, because stocks and shares are quite easy to access, you can just set up your account with any broker, right? Any stockbroker, digital broker, or traditional broker, and you can just choose the Islamic funds on there or the Islamic stocks on there, and you can invest through that. So that's pretty easy. When it comes to the Middle East, there's some other options that you can explore, people like Baraka, Sarwa, and others. And then each country, like the USA, has its own dynamics. They've got their own, so it depends on the country and what options are available to you. If there's an Islamic provider, great. They will have made things a little bit easier for you by pre-packaging up some of the Islamic funds together, but you can always just DIY it yourself when it comes to stocks and shares by just using a stockbroker and doing a bit of Googling.
Right. I guess we haven't answered the biggest question. Why should we even start looking at investing? Like, what's wrong with just sitting, with your money, like, because many Muslims I know, they don't even have this mindset at all. Like, I think like, since I'm a convert, I look at it like from also an outside view. There's not many Muslim startups. There's not many Muslims I wouldn't say founders, but yeah, people in tech or, where I am, I hardly meet any. So what's up with investing? Why is it important, for people to get in as a Muslim?
A number of reasons. The first one is just a pragmatic reason, which is, inflation. Your money is going to be worth less. If you leave your 50,000 in 10 years' time, that will be worth less than 5,000 just because of inflation every year. If you invest that into something pretty straightforward, that's going to be worth 200,000, right, in 10 years. So it's your choice. Do you want 5,000 in 10 years or do you want 200,000 in 10 years, right? So I think most people would choose 200. Now, the second, and for me, I think even more important reason is because in Islam, our wealth is given to us as a form of trust, right? Given to us by Allah subhanahu wa ta'ala. And it's our duty to, manage that and look after it, just like it's our duty to manage and look after our families, our environment, our communities. And we are going to be leaving this wealth behind for the ummah and, the people in the ummah to use after us. Now, if we are neglecting our duty in how we manage that wealth, that is a big problem. Because today the Muslim community, regardless of, you, Jan, you might not be interested in investing, but your wealth is given to you to decide where you put it, and your decisions will have an impact on the Ummah's wealth in 20, 30, 40 years' time. And the Ummah is currently much behind, the average population. And so for that reason alone, I feel like it's a duty upon us to, sort our act out and, really make sure that we're managing our money properly.
Yeah, that makes sense. Well, thank you so much, Ibrahim, for giving us this overview of Islamic finance and mortgages and everything. And if people want to check out more of your stuff, where do you hang out online, or should they go on the website or check out the YouTube? Or
yeah, they can go on the YouTube. It's at Islamic Finance Guru or IFG. If you Google that, you'll find it. Or LinkedIn, I'm on LinkedIn as well. Subscribe to the website. Any of those will get you there.
Perfect. Well, there you go. Thank you so much, Ibrahim. Jazakallah khair, and let's stay in touch for sure.
Awesome.